Hello, everybody. I'll be starting the webinar in just a few seconds. Just let everybody get situated. Hey, Eduardo, and nice to see you guys. Hope you had a good day. Hey, Duncan. All right, I'll just go ahead and get started. So welcome to the third of the three-day live trade execution webinar series. My name is Mark Shaw's, I'm the pattern trader. For the last couple of days, I've been talking about how I look at price patterns, price trends, price action to determine, where any market is likely to go. Gold, silver, euro, yen, Tesla. It doesn't matter what you're looking at. I don't try and understand that instrument. I just look at the price, because my whole philosophy is that price is a discounting mechanism. Price is ahead of the news. So we've been watching Tesla unravel in the last couple of days, but the patterns were in motion many months ago, even a year ago. A year ago, it told us that this stock was topping out, and whatever's happening now was already in the market. And that is the beauty of the markets. If you learn to observe just the markets actually tell you where they want to go. And so it's on that basis that, I've been presenting my ideas, my methodology, my 4-step trading plan. I put my book up yesterday, a link to the book. It kind of spells it all out. And that's what we've been looking at. So today I'm just going to do a quick recap. Neelan says, should I get out of the QQQ? I don't know if you're long or short. If you're long, you probably should get out, but it's too late. Markets are closed. So tomorrow we do have a kind of Super Bowl event for asset in the form of the U.S. Consumer Price Index. The Fed obviously watches this number very closely to determine whether they need to step on interest rates, keep going, how hard to keep going. And so that is going to be a key number. But the markets are already reflecting, irrespective, good number, bad number, these markets are going down. They're going down hard. We may have a seasonal kind of few weeks where we just mess around here, but we're going to go down, and I suspect we'll probably go down tomorrow. So I've been short Tesla, and I've been short Illumina, ILMN. I'll take a look at that stock and tell you, why I got short today in Illumina. I got out of all of my other stuff today. I've been fooling around in some options. I bought some calls a couple days ago, made 3 times my money. I saw that the stocks were up against a resistance level, and I got out. These were my FX positions on Monday. This is what it looked like on yesterday. And I ended up just taking all, profits on all of these positions. I just felt like these asset classes looked like they were bumping up against resistance. I took a boatload full of dough and took my money and went home. So I'm kind of just sitting on those 2 positions right now. I wanted to go short into the close, into the Qs. I wanted to buy some puts, but I didn't. So what I've been looking at is that these markets. And what I'll do is I'll put all of the major indexes one on top of the other, and that way it's just easier to talk about them together. So the 3 major indexes in the United States are the Dow Jones, the S&P, and the NASDAQ. So I put each one of those, and you can see they're all at various, they're not all the same. Can't just trade everything the same. So I'd say the Dow's been the strongest, S&P somewhat stronger, and the NASDAQ is just sitting on the floor and looking like it's just ready to go to lower levels. So this is all I watch. I don't know what Powell's going to do. I don't know what interest rates are going to do, but these markets are telling me what to do. I probably should have put up the weekly. Let me start with the weekly, and then we can go backwards. So you can appreciate now when you look at things from a bigger perspective, meaning that I'm not looking at a 5-minute chart, I'm not looking at a 15-minute chart, I'm not even looking at an hour chart. This is a weekly chart. So this gives me a couple of years worth of information. And so once I understand the big picture, then I start drilling it down into smaller time frames to set up a trade. But the first thing is to understand the cards you're holding. So on the top, we have the Dow, and I showed you yesterday that it banged exactly into that upside resistance. I mean, look how these things bang right on the nose, and that's where it stopped. So it's no mistake when they hit these areas, these markets observe that. So now, depending on how this ends up for the week, this could be it. I'm looking for the markets to go to much lower levels. And I wasn't, clear if we would have some kind of seasonal bias. Usually after the elections in the United States, you have a seasonal tendency to rally. But I think this is a very much of an outlier year. These markets are doing things that they've never done before. So this is the Dow Jones. And so I just look at everything in terms of price and how it reacts to a certain structure. So now I kind of hoped that we'd have one more poke right up here to about 34,000, because that's where I would just open with, blazing guns to look for a move to that level. But we may have already crapped out. This may be the top already. And so I am looking for a move to the lower end of this channel, which puts the Dow at about 25,000. And that sounds about right to me. I do think we'll get there by probably the middle of next year or sooner. So that's the Dow. Then you kind of have the S&P that's been kind of going in this pattern. You actually have two patterns in the S&P. This is called an ascending broadening triangle. As you can see throughout the pattern, prices are ascending, and then it starts out very narrow and then widens or broadens out at the top. And then we can typically tell once it breaks from this where it's going to go, and that was to the very low. And look at that, it banged right into it, right on the nose. And you can see now it looks like, so the path in this, so the patterns are already in motion. These are all just distractions. This is what is going on. And so these up moves, they're very hypnotizing. Everybody gets all worked up. Now we've made a bottom. You hear all the commentators kind of, say all the reasons why we put in the low for the year. But I don't think that's the case. And this thing just looks like it wants to roll over. Sometimes visually, you can just feel the weight. And so this thing just looks like it wants to keel over, like it did here. And so, again, I'm just going to look and see how prices react, and I'm going to get in sync with what they're telling me. But again, this is a weekly time frame. This bar won't close until Friday night. So, what it looks like now is probably, going to be very different on Friday night. So, but again, these are the major patterns. So you have the ascending broadening price pattern, and then you also have this double top where the market made one peak, backed off, made another peak, and now you have this top. And so if the market is topped, it's telling you what? That on balance, it's going to go lower. And so I do believe that we are going to go probably south of 3,000 on the S&P, and perhaps even much lower. I think this is going to be one of the biggest bear markets of many people's lifetimes. I've been saying that since last November. So these moves, they get us all, going, but these are rallies in a bear market is just like a sawtooth, just keeps ratcheting lower. And the thing is, the heartbreak is that every time people get their hopes up, the market makes a new low. And that is the characteristic of a bear market. So you're in this time frame and you think, oh, we bottom, market makes a new low. Rallies, makes a new low. Has a huge rally, makes a new low. Has another rally, and it will make a new low. You can bet your boots on it. So this is what I look at. This is all I look at. You know, if you're trying to understand Fed policy and interest rates and inflation and whether we're going to have a recession, whether we're not, that is not how you make money in trading. You figure out where the areas are, and then you set up your trade with a risk reward parameter. So if I risk that much, I can make that much. And that looks like a good offset to me. And so this is how I set up my trades. So now you can see that recently the Dow Jones has had a pretty enormous rally, like 10, 15% off the bottom. But you can see during that time, the NASDAQ is exactly where it was, just stuck in neutral. So this is, you know, the difference. You know, I always say it's a market of stocks, not a stock market. Some stocks are going up, and some stocks like Meta or Amazon or Microsoft are going lower. And so you simply have to observe the instrument that you want to trade and set a risk reward calculation. Now, you know, we've looked at ascending broadenings. This is a kind of a megaphone top. And when we look at the NASDAQ, we look at this head and shoulders. It looks just like a man or woman's left shoulder, head, right shoulder. But just whether it's a double top or a head and shoulders, these are reversal price patterns, meaning that everything leading up to them is now going to get thrown in reverse and go the other way. So this is what I look for. I look for what I call these governing patterns, these patterns that, you know, dictate or govern the trading action weeks or months. So every day these guys are changing their mind, and if you listen to them, you'll go crazy. On a green day, it's all bullish, and on a red day, the world's coming to an end. And after you know, a week of hearing that, you feel like you're going to go nuts. But if you just understand what the pattern is that's directing the traffic, that's all you really need. So that, you know, whenever I go long, and I, you know, can't go short forever, I kind of have a mindset that this is not going to be long lasting, that I'm just in this stock for, you know, a few days, a few hours, whatever it is, you know, because this is the big macro trend. It's lower. It's going lower. It's going to go much lower. And that's just the reality of what we're, you know, looking at. So you can see the NASDAQ now is hanging out right at this area around the 255. We're banged into it here, banged into it there, and here. And so these levels provide, you know, areas of support. But the more you bang into them, eventually old support becomes new resistance. And that's how the markets work. And that is what you're going to see. And that's probably not going to be an exaggeration. This thing looks like it wants to go much lower, even though there's just been absolute carnage in stocks. I think you could go down another 30% from here. Sounds crazy, but that's what the markets are telling me. This is not just something that I made up or read in a book, or I have this feeling. These markets, these patterns are telling me that this thing is setting up to go much, much lower. I mean, much lower. And tomorrow we could have a, you know, if CPI is bad, if we get another print over 8%, you know, this thing will just open much lower, and I'm going to be really upset I didn't buy any puts. I don't know why I don't have any puts, but I don't. So I have, you know, Tesla, and I have Illumina, and we'll see what happens. But, you know, sometimes you just, you know, have to kind of when you have a huge moving event like that, I'm kind of hoping that we kind of go higher and then I can sell into a rally. So we'll see what happens. So I told you I was short this stock, aluminum. Kind of a quirky little thing. And again, if I show you these things and you don't have access to them or what have you, the whole point of this exercise is that I'm just trying to show you how I analyze markets. It doesn't really matter what this is. I mean, I don't know if it said corn up here or natural gas or the euro versus the yen or IBM, it really doesn't matter. And so that's the whole point. I'm just trying to show you a way to look at markets from a price standpoint. So let me just back this up. Trying to So when I look at a chart or open up a chart, I mean, and there's thousands of things we can look at. Some things should just leap out and speak to you. Otherwise, just leave it alone and go on your way. And this is, I always said I don't really like trading a sideways market. And this is obviously in a sideways pattern, but it's, reasonably mature, meaning that it's kind of been in this pattern for quite some time. And I do think that it's ready to break to the downside. And I think, and really to me, what trading is, it's all about risk and reward. If you can get a small little area of risk for a big reward, that's what it's all about. So to me, what I look at in trading is, first off, it's like, what is the phase or the condition of this market? And I think I always kind of ask that question as if I would have like a 6-year-old sitting on my lap and I go, what is this market doing? And drop from 420 to 220. So this thing is dropped in half. So it's clearly in a down phase. So I simply want to look for and recognize the opportunities to surrender to, what this market is doing, which is largely going lower. And so you basically have had this long trading range, and you can see that you had this double top here, and it gave way to a nice little price direction here. And I, sent this to our members at this point. And so that, I'm just looking for trading opportunities within the cadence of certain markets. But now what I'm looking at is you kind of have this funky asymmetrical double top. And you don't have to have the tops in the same area, right? This one is lower than that one. But I think we can agree, if we look back and this thing collapses, this will look just like an M. It doesn't matter that the two peaks, sometimes the peak is higher than the other, sometimes it's lower. Doesn't really matter. I think this is what's, what looks like. And sometimes I get in a little bit early. Technicians always say, well, you have to wait for something to confirm by going through a neckline, which is simply a line that's drawn through the pattern. But to me, I can see what's happening. This is in a downtrend, and this thing stopped going up. So you can see that 4 days ago, this thing made a high, and then the next day didn't make a high, and then the next day didn't make a high. So basically, it's like one of those planes at an air show. You listen to those things that go straight up in the air, and then they just run out of gas or inertia, and they just start sputtering, and then they just fall to earth. So this thing, has not been able to make a new high. And then you have what I call these inside bars. I talked about this yesterday, where you have basically, this is what it kind of looks like. And then today was really small. So the smaller the range, the smaller your risk. Basically, I would just come in tomorrow, put your sell stop under here, put your stop loss there. You've got a very small risk. And on this chart, you can see how small it is. It's like nothing. And I got a little bit ahead of it. I just sold it on the close. just in the bet that, we could collapse. And if it opens the other way, I'll just get out and take a very small risk. But, I think the momentum and everything's on my side. So this is what I look for, just areas where I can get in and park myself and get a peek at something and see if it works out. Sometimes it doesn't work out. And then sometimes it works out really big. I mean, if this thing starts falling and it starts looking like what I think it is, I will start building a position. So I got a, bite-sized position on here. It was actually a fair size. I've got 2,500 shares of a $215 stock. And I will start building a position. So it doesn't matter really what the instrument is. I just look at the price action, and then I look at a point in time where I can get in and, look for that market to go in my favor pretty quickly. And if it doesn't, I'm just going to get out. So like I was in silver today, I was long, I bought all these call options. I thought silver was going to go, and then it didn't follow through. And this is not an environment where I'm in the mood to see if something's going to follow through if it starts stalling. So, you start stalling here, I'm not going to wait for the show to see that it's going to, peter out here. So I'll go to silver in the meantime, and I just got out. And, if the market doesn't do what you think it's going to do, and there's something, just bounce out. So you can see that there are patterns within the patterns. So this is kind of a huge downtrend. And then right here, you had this double top, and then you had this head and shoulders. So what I just try and do is recognize these patterns to go for a ride. So this thing fell from 230 down to 180. That is a nice little, joyride. Similarly here, you came to 230 and you went to 180. And so here you're at this point, and now you go to 180 and perhaps south of that. So this is what I'm looking for. I'm just looking for these kind of moves in the market. Take $20, $30 on, a couple thousand shares every couple of days. It does magic for you. So this is what I'm looking for in the market. This maybe is not the greatest idea, because yesterday I told you I don't like to trade sideways markets. And this more or less has been one. But after a while, if a market is such a down market, and I'm looking for this to go and make new lows, at some point the market gets mature, means that it does so much work. And there's no way to really define that other than just, looking that this has kind of gone months and months of going sideways. And so you say eventually, if this is going to give up the ghost, we're probably very close to, that kind of. And if I pull away to the weekly chart, you can see how negative this thing looks. So what I'm looking at is not so much all the stuff that's going on down here, but all the stuff that preceded it. So this is a huge top. And then you have these shoulders. So when you step back now, it looks like a huge left shoulder, head, right shoulder. And so this is a huge bear price pattern that says on balance over time, and that's kind of the key phrase, this thing is going to go lower. Now, the trick is, we see these patterns all the time, but the markets can put you through hell for a long time before it actually goes. But, we're at this juncture also on the weekly where it feels like we've stalled out, and I can imagine it start to gravitate down here. But the point is, whether I'm right or wrong, is that I've got such a small level of risk in my mind. Now, what I usually counsel our members to do is put a confirmation order in the market, meaning that I evaluate my setup, but then I like to confirm it by putting an order above or below. So if I want to sell something, I want to put an order like below these prices. So tomorrow, if the market opens, let's say we have a good CPI, it opens and it goes straight north, you're not going to be put into that. But conversely, if the market kind of opens and messes around and does something and then hits you, you're likely to be put into a good trade. So I always like to, confirm it. In this case, I kind of jumped the gun. I went short on the close, and we'll see how it works tomorrow. And then if it goes through these prices, I'm just going to add to my position. But the point is, if you put your entry order there and you put your stop loss on the other side of this, you can see you have a tiny risk for what could be a huge outcome. I could see the stock in half of what it is right now. So that means, you might risk $3 to make 100. And that is, to me, what trading is all about. It's identifying little pockets of risk where you can hang out and get, a huge throughput. There was a trade a few weeks ago that I gave my members, and I put this up yesterday in Schlumberger. Schlumberger kind of set back today, but it's not the point. So it was right in this area, that it stopped going down. It had this tight little quarter. What I was really looking at is this bottom here. So when this thing stopped going down and then closed above this little cluster right there, I said, buy it right there, $36.15. And it went all the way to $55. So in my mind, you get in a stock like this and you probably have a $2, $3 risk and you have a $15 upside. And that's what I'm looking for. I'm looking for that risk reward offset. And even if you're wrong 5 out of 6 times, this is where I just make a massive amount of money. Buying call options, going long the stock, what have you. Now, this is an example of a confirmation where last night I sent to those on my email list, I said, get in here, buy it above this inside bar. So you can see you have this inside bar. I thought if the trend continues, but you can see today the thing just opened and collapsed. So guess what? Our members never got in because the market didn't confirm it. Just opened, went the other way. You're not in it, no harm, no foul. So that, to me, that's the best of both worlds. I love kind of putting an execution order and not getting filled, because that means I was wrong about my analysis and I didn't pay the price. So let me look at Tesla and then I'll take a couple of your questions. Actually, you know what I'll do? I'll quickly go to silver because I know I talked about silver. So, sometimes we run into a bit of a conflict as to what is the guiding pattern. What is the pattern that's directing traffic? What is the pattern that's going to give us a ride on a decent move? And every once in a while, you run into a conflict because here is a very clear pattern, this double top. And then when I saw this rounding top, this is where I told our members to get short. And I was short gold and silver in this little area here. And I made just a boatload of dough. But that was then, and this is now. And the market stopped going down and started putting on a counter pattern. And then it looked like we were somewhat breaking out. We started breaking above this resistance level. Now, sometimes when you break out, you retest the breakout, and then you go back up. And this thing could still be ready to go higher. I mean, there's an aspect of this that tells me that this should have gone down, and by not going down, could go up. But you can see today, we just stalled out. Now, it's a very benign day. Doesn't look like much. But, if something doesn't follow through, I don't want to hang around to kind of see the other side of it. So I could be completely wrong. Tomorrow it could look like this, and I would have forfeited a good deal of profits. But again, the way you can play this is you could put a buy stop in the top side of this, put a stop loss there, and if this is going to go up, you can still catch it. So it's going to be interesting to see how it worked out. But I did jump out of all my positions. This is still a guiding pattern. And now we're at the top side of this trading range. And, we could get banged back into here. So this is more ambiguous. It's going to be interesting to see how this plays. And I could be kicking myself tomorrow if it's, just opens way up there, but that's just the way it goes. Sometimes in trading, it's more about capital preservation. When you get into these big trading areas, and you have a number like tomorrow where, the Dow Jones could open up 1,000, it could do anything. So, there are certain times to hold them and certain times to fold them. So I folded my tent. I made a nice amount of money just in this little short move. And, we'll see what happens. Now, Tesla, I've been telling our members for a long time that the show is over in this deal. I have emails going back, 6 months or a year, where I entitled my email "A Parabolic Implosion." A parabola is something that goes up just very, very quickly, just almost abnormally quickly. But those are the kind of markets that also come down just as fast. And that may not be an exaggeration. I think you'll see Tesla under $50 at some point. Now, people would have thought you're out of your mind, if I would have told you that up here. But that's what I was telling our members up here. This is over. The death rattle just took a lot longer. So right in this area, Musk had no ambitions of buying Twitter. There was no knowledge of any of this thing. But in the meantime, the market was turning. Whatever the insiders, the traders, and that's what markets are. Markets aren't about what are interest rates. It's all about human behavior. Where are people buying? Where are people selling? And then the market is just a reflection of all of that cumulative behavior. You're just trading behavior. You're not trading Tesla earnings or this or that. The markets are ahead of the news. So whatever Tesla's earnings or production numbers or whatever, these guys up here were already telling you what the whole deal was. And I've been saying for a year now, Tesla is over. And that every rally is just a selling opportunity. And that's exactly what we've seen. So this is just, if you stand back even on a bigger, is a huge topping pattern. This is your cheat sheet. This tells you that it's over. You'll never see another high on this stock. And then if you peel back, you can look at this through the prism of a big head and shoulders. So it looks just like a man or woman's left shoulder, head, and shoulder. But here's the problem. By virtue of how big this measurement is, so if we measure from this neckline, which is simply a line drawn through the pattern, to the top, so that's, whatever, 180 to 420, my math is terrible. That's $240. Let's just say you take $60 off that. 60%. You're basically at zero. That's what this stock projects. This thing will go under $40 or $30. It's over. This thing is going to come apart. And now it's just kissing this neckline. And you may have a little support in here. Now, again, what prices usually do is they usually leave an area and then they revisit it, they retest it, and then they go. But however this thing does it, once it kind of comes through here, there's like no obstruction. It's just got an open field. This will just collapse one day. You'll walk in one day and it'll be down $80. So that is just price. That is simply price. That's not, Elon or Twitter or car prices, or it's just price. So I just trade price. And so if, I was telling our members, I do this early morning program called the Boiler Room. And I'll give you a heads up to that in just a moment. This is where you can see Tesla was hugging this long-term uptrend line, and then it eventually banged through here. This is what I'm talking about, how prices bang through a very profound area, and then they come and they retest it. But then you can see this thing failed, made a new low, and so this is game on. This is in free fall now. And, there's almost no risk in shorting this thing. If this thing was up $10, you just short it. Every time it rallies, you just can short this thing. Now, it is possible, again, that, we're in this area where there is this kind of little bit of support around 180. I mean, we're trading in lower in the market right now. We're trading about 176. We've already broken through this area. So there is, thing that you could get some volatility and hang out in this area. But every single rally is to be sold. So I don't have to worry about its car, production, it's, how much Bitcoin it's got on its balance sheet or any of that stuff. I am just looking at price, and price is telling me that this is over. This is over. So, you guys have any questions on this kind of methodology? Let me where is this thing? I'm going to put this in the chat box here. If you're interested in just send me an email, Mark Shawson, thepatterntrader@gmail.com, with the subject line, "Let me in." So if you want a little heads up on what we do, how to get this knowledge, then give me just send me a line, and we'll figure a way to get you started. And to me, it's really all about the education. So Sarah says it sounds so simple. It really is, Sarah. I mean, I've got decades of experience. I have, certain instincts. But again, if you just understand pattern, and then, I also told you about what I call these key reversal bars. I call these bars my insurance day bars. Now, this is a weekly chart. So you can see that last week, Tesla made a new high. It kissed exactly that long-term uptrend line and failed there. And then it closed on the low. So sometimes these bars made a new high, close on the low, made a new high, close on the low, made a new high, close on the low. All of those attempts at this area all failed. Every time it got to $320, the sellers were in control by the end of the week. So the price and the patterns, these guys start pointing in the direction that they want to go. Same thing here, made a new high, close on the low. This thing was pointing where it wants to go. Made a new high, close on the low. So price, certain price action. You can't just kind of look at this in a vacuum. I'm looking at this in the terms of this pattern, this rounding top, this double top right here, and then the price within it. So the combination of the patterns and the price action, where you see it bang into a resistance, and then it's also what the price does. Makes a new high, closes on the low. And basically, that's pointing to where the market really wants to go. So the market actually does point to where it wants to go. It just takes its sweet time, and then it fakes you out. It creates all kind of hell for you, just makes all the weak hands, exposed, and then it goes on its merry way. So the markets don't go straight down. They go, it's like an elastic band. It gets pulled back, you short it, pulls back, and that's, once you understand what the game is, then you can play it accordingly. So you can see that So anyhow. Mark says, if the market goes up tomorrow, would it be wise to close my short on Moderna and just buy it and ride it up, or is that a bet? So Moderna is not the market. Every stock has its own characteristics, and Moderna is in a short squeeze. It just, they're squeezing the life out of the shorts. Eventually, this thing's going to crash, but in the meantime, they're creating hell for the shorts. And so, even if the market's going down, this thing has been going straight up. Now, you had a mini reversal here where you made a new high and you did close on the low. But, you can't just look at one swim doesn't make a summer. You kind of have to see this come together with a pattern. So Moderna has been in this big, bad short squeeze. And I sense that it's right at the top of this thing where you kiss the upside here. And now you're going to come at least back down to 145. You could. But, when something goes straight up, it doesn't go straight down. So, I always look for this concept of spacing. Whenever something's topped, I look at just to put on a little bit more space. So maybe it goes and retests the high. And then if it fails again, then you've got even more evidence of a risk reward trade, where let's say it looked like this tomorrow, where you have two failures, made a high, close on the low. You could basically sell it there and put your stop there. So now you've created a risk reward offset. But to me, that in and of itself is, I would do that trade. But there's a whole bunch of trades, just like Illumina, where this is in a downtrend. And, in this area, this is where the resistance is. So, here was a double top, head and shoulders. Here was a double top. And now, it's still a little bit too early to tell what's going on here, but you're starting to get in the neighborhood of a lot of resistance. This is a downtrend, and you're starting to bump up against an area where, this thing could start failing. So I will be looking for signs of this thing starting to fail. And today was the first one. So, but, tomorrow it could, go straight back up again. So we have to kind of wait. And so to my mind, when something's going like that, you either ride it, or if you think you're going to short it, just wait for the evidence to come in. And even if you're, late, wait for something where you can understand, what this thing looks like. And if I saw something like that, then I would load it up. So, Moderna is not the market. So whatever the market does tomorrow, this thing's in a short squeeze. You can see it just doesn't go down. It just goes up every single day. And so that tells you that it's eventually going to, come down hard, but eventually could be, up here. So we have to wait. But I'm getting the sense that this thing is starting to get tired. And again, you can see it's banging up again against the roof of this trading range. Mick says, are we still short New Zealand ad? I'm not short right now. I was short that. I got stopped out. I didn't get back in, but I think you probably can. I mean, although, these kind of currency pairs are very range bound. And so in the main, unless I really see an opportunity, I don't trade them. But having said that, here is an opportunity. And this is how I would look at New Zealand dollar. I mean, all the other patterns in addition to this are also very bearish. So this is, a resistance pattern right here. So this pattern was telling you that this thing was going to go for a ride on the downside. And I do think that this trend will continue. We did break out of this major area. We've now retested it. And now we're somewhat failing. So you can see this is a weekly bar. So you can see this week, you have an inside bar where the range of the high and low of this week sits within the range of the high and low of the previous week. So what this says to me is that we've had this short covering rally, and now this is stalling out. This week, we didn't make a new high. Now, there's a certain aesthetics to charts. When you go straight up, you don't go just straight down. So, but I do think that this thing is starting to, get some resistance. And, into next week, if you start going up, I would start shorting against this area. I think you can start, shorting and then putting your, so if you get a rally, I would just short into that and create a very small risk reward to see if this thing is petering out and likely to go. I think it will go lower. I just think it needs a few more weeks to space itself out before it falls again. So there's a whole way these things kind of come together. There's a good time to do certain things and a better time. But I do think this rally, again, when you see something all blue where they don't let you out, every single hour is up. That's a pretty good sign that it's a short covering rally and that it's a dead cat bounce and you're eventually going to go back into the trend. So the short answer is I would short this, yes. You can see you're in this trading channel. You basically just snuck out there and you faked these guys out. And now you're coming back into the channel and likely to go back down. Let's if I draw that a little bit better. So you're right at the top of a channel. You can see every time it's at the top, it just hasn't, so I do think that this is an area where you could set up a risk reward trade and, not risk too much to have a nice trade. So again, just message me at Mark Shawson, the pattern trader. My assistant is Frankie, so just message me, Mark Shawson, the pattern trader at gmail.com. And in the subject line, just put let me in. So I put that in the chat box and, let us know if you have any questions. Before we adjourn, I would really love a favor of you guys. Let me know what you thought of this webinar. Let me know if you got anything out of it. It was valuable. It didn't help at all. And just post your review. You can basically just click here. And then similarly, if you're thinking about doing something with us or with me, you can see what other people have to say. There's 340 reviews. Most of them are pretty good. And you can just read what others have to say. And so I really appreciate that. I'm going to drop this link in the chat box here. And I would really appreciate it. I know it's a pain in the ass, but for me, I've spent a couple of days with you. I'd really like to know what you thought, what you got out of it. So just in an informal poll here, do you think that this kind of thinking, this kind of methodology, applying these kind of objective skills would help you in your trading? Do you think you could benefit by this kind of knowledge about this kind of application? So let me know. So Neelan says yes. So you guys are very quiet today. I'm not hearing from you. So Marlene says absolutely beneficial. So thank you, Marlene. And yeah, if you would just put something in the review website, just in your own words, what you got out of it, what you didn't get out of it, I would really appreciate that. So that's basically what I just wanted to give you a bird's eye view. This week, we, looked at all kinds of things: silver, Tesla, Illumina. And again, you can apply this to whatever you want to trade. So Mick says, thanks, Mark. Look forward to getting on board in December. Brian says, I just love it. So thanks, Brian. Mark says, great as always. Going to Trustpilot now. Really appreciate it, Mark. Thanks, Michael. I'll always thanks, Michael. I do strive. I'm a little tired today. It's a long day. But, I just, try and impart. And so what I'm trying to do is take the bigger pieces out of the market. Now, sometimes the, market's not always in a phase where you can do that, but it doesn't really matter. You don't have to win all your trades with that kind of philosophy. The fallacy with what most people are doing, they're trading on too short of time frames. They're trying to pick little pieces out, and then they're trying to do that consistently over time. And, it's just simply not possible, and it's not really rewarding enough. So you can see, I just made I made a boatload of money in a reasonably small move this week by just identifying pockets where I could see areas of support. I bought the triple Q calls. I bought some silver calls at an area where I thought I could just park myself. I got even just a little bit of energy. It wasn't even that much energy. And I made a boatload of money. So JP, I appreciate it. So Yashvin says, I get something new every day. I've been following you since last December. My trading has greatly improved. So thank you, Yashvin. If you would, say something like that in the reviews, I would greatly appreciate it. Antonio, thanks. Great 3-day event as always. You're welcome. Jonathan, you're welcome. Anybody new that Tandarai says, I enjoy the session so much. No. Is there anybody who is new on this, really hasn't traded a lot, and probably seemed a little bit overwhelming, but would just like to know if there's anybody new, just started trading, or just new to the pattern trader, and what you thought about it. That would be interesting to me. So I think I'm going to cut it off there. Send me an email if you're interested in any one of our programs. I do a morning program where I do everything live. We analyze the market before it actually opens. I can see in the pre-market session, what's going to happen, and then we try and go from there. And to me, that's really the best of what I do, because it's real time. And this is where most of the benefit really occurs. Greg says, my big question is, do you teach or just give alerts? I like to think I do both, Greg. So this is what I'm doing. And then on the, the live sessions in the morning, I tell people, if I'm looking to buy something and the market opens lower, I'm actually buying it in the pre-market session. And I tell, the members on that exactly what I'm doing or why I'm doing it. Then I, draw it up on the chart. So, I do both. This is not really a signal service. So, yes, I give out trades, and some may work, some may not work. But really what I'm trying to do is impart an education, impart how price action works. So you can really think through this for yourself, so that you don't need me, so you don't have to rely on some guy on TV or the Fed or some economist to do your thinking for you. The market is the smartest entity on the planet. The market is bigger than governments. The market is bigger than central banks. The market is the truth. And, eventually the market is a reflection of reality. So things can get out of whack, but eventually the market has to reflect, certainly in terms of a stock, what the intrinsic value of that stock is. Now, sometimes, things can be very manipulated. This is GameStop, and it was once a $5 stock, and then it went to a $500 stock, but that didn't really change the business. It was still, operating in a mall, and not making any money. So these, traders got fried here, but I said, eventually this is going to go back to $5, because everything has to ultimately reflect the true value. And sometimes the markets get out of whack, like you're seeing here, but eventually the truth, has to come. This has to, reflect the underlying value of this freaking company. This was one of the most whacked out things that I've ever seen. But even when it went to 500, it didn't change my opinion. I said, this is still going to 500. I mean, $5. It's still, something that operates in a mall. And then they changed, their business model to get on board of this crypto phase. And then, this crypto asset class has, been shown to be what a garbage asset class that it is. It's just a Ponzi scheme. It's one shit coin being correlated to another. So everything that was premised on that is just going to go into the toilet. So the markets are the ultimate reflection. And, to me, that's how I look at my trading. That's how I, look at politics, how I look at organized society. So we have a society today that's being so centrally planned and centrally controlled by central banks and governments. And to me, that's just, financial engineering and social engineering, and it'll never work well. The markets are the ultimate arbiters of, the purest allocation of resources. Now you have to put guardrails, but, you have to have price discovery. So China has just gone from this very capitalistic society to this very centrally planned society now, where everything is done, organized at the top. And, they did that in the Soviet Union. They had 5-year economic plans, and that will never work. So I am an absolute believer in the markets. And, if you have financial engineering and social engineering, it's not going to work out well. So, Jonathan, thanks. Terrence, so crypto is crap. Yeah, crypto is a Ponzi scheme. You now have one guy in control of the whole asset class. All right, guys, I'm going to leave you there. Thanks a ton. And hopefully I will see you somewhere along our trading journey. I'll be around, so let me know if I can help you. Thanks, Marlene. Thanks, Jason. Neelan, thank you, everybody. Take care. Thanks, Dwight.